Good afternoon, everyone. You're welcome. We are going to start in 5 minutes. Good afternoon, everyone. You are welcome to the 9th edition of Akanni Days Insider Series. My name is Zacheus Akanni. I am an associate in the banking and finance, fintech and startup teams of the firm, and I am going to be your host for this edition of the Insider Series. A brief background into the history of Insider Series. The Insider Series is an initiative of the fintech and startup team of the firm, and the purpose is to drive conversation on prevailing issues and recent developments in the fintech and startup ecosystem. And we do this by inviting industry leaders and sector experts to give their opinion and thoughts on these developments and issues. Today, we have lined up a guest with extensive experience to come and speak on our theme for today, the future of finance, navigating the fintech revolution in finance. Before I introduce our guest, I would like to say to our audience that we want this session to be as interactive as much as possible. So please, if you have any question or comment, kindly put them in the Q&A box. We will ensure that our speaker answer as many of them as time permits. Now to introduce our speaker for today. Arome is Mastercard's Senior Counsel on Regulatory Affairs for Eastern Europe, Middle East, and African region. She has more than a decade of experience advising technology companies and financial institutions. She is also a thought leader on end-to-end payments, new payment platforms, and networks such as central bank digital currencies, open finance, and cryptocurrency. Ina, thank you very much for joining us today.
Thank you, Zacheus. Thank you for having me.
Yeah. So, fun fact for our audience, Ina used to work in Alukwano Bode. As a matter of fact, she was here for almost 10 years. So this is like an homecoming, although a virtual homecoming for her. So Ina, how does it feel like to be back home?
It feels, I'm happy. I mean, I've always been, my heart is at Alukwano Bode. It's not like back home, it's just visiting. I'm happy to be a part of this program. Thank you for inviting me. I'm also happy that I was invited to be a guest speaker here, because I remember I was part of the team that developed the Insider series, and for me it's full circle just coming here and considering me as a thought leader and sharing my experience. Thank you very much, and thank you to everybody.
Thank you for accepting our invitation. I would like to ask, before we go into the business of the day proper, I mean, I'm a very big fan of you and your work. I mean, the last time we saw each other, you were probably in some tropical region, having fun. So thank you very much for accepting our invitation today.
Thank you.
I would like to ask, as MasterCard Senior Counsel for these large regions, what's your typical day-to-day work schedule like?
Okay, so basically, I'm responsible for providing regulatory direction and counsel to MasterCard for EMEA. So I advise specifically on West Africa, North Africa, MENA Central, and Levant clusters within the region. I also am the regulatory lead for some of our product houses, like data and services, cybersecurity and intelligence, crypto, CBDC, open banking, franchise, market development, and something that we've seen becoming prevalent within the region is called systemic important payment systems. What I do on a day-to-day is advise the business on their core business. So MasterCard as a global company is a switching company, right? In different jurisdictions, it depends on what our activity is. For Nigeria, we don't switch, right? Primarily a card scheme. And what I would do is advise the business in the different clusters, what their compliance obligations include, engagement with the regulators, how to also collaborate in terms of partnerships with ecosystem participants. On the product side, because we provide switching and network capabilities, we have what we call value-added services that's layered on our core business. And as I mentioned earlier, some of them include data and services. What I do is advise the product teams on the deployment of their product solutions, how they can partner with customers, and if required, if there are any regulatory licenses for obtaining or for providing that specific product in a particular market.
That sounds like a lot of work. I mean, you've worked like as a legal practitioner in Alukwano body for almost a decade before you transitioned into your current role as an in-house counsel at MasterCard. How does your work in the law firm differ from your work as an in-house counsel?
Okay, so in A&O, right, what I did was advise clients based on instructions, also provide announcement or issue announcement or announcement on new developments, right? Engage our clients, back-to-back engagements, introduce clients to regulators, try and get licenses, but it was based on demand, right, from our clients. There isn't much difference in what I do right now in MasterCard. The only difference is when I was in A&O, I would advise and move on, right, and check in with clients on the progress of their activities. In MasterCard, I'm from the beginning to the end and even post-end, right? So I take risk-based decisions when external counsel is unable to give advice. I engage directly with the regulators. I exposed to a wide range of products. It's mind-blowing because, you know, A&O, I appreciated A&O because I had clients in different sectors of the economy, different technologies. MasterCard, on the other hand, is one client, but then the technologies are ever evolving, different sets of technology. It's almost like the same, but the only difference is in a law firm, your advice stops when you submit your feedback, but in-house, it goes on and on to the end. Even when there are disputes with customers or even regulatory issues, you come on board. And what MasterCard also does is it opens my mind to the world. I learn every day. It's priceless, basically. Just learning new things every day. Even when you think you've learned something, something comes up and you're at the forefront of it, and it's technology because it's ever evolving.
Thank you very much, Ina. That was quite detailed. I know fintech is an area of law that keeps evolving every day, and young lawyers are keen to enter that particular space. So what you said probably just triggered something in one of the young lawyers that we have on the call. Thank you very much, Ina. I would like to ask, you have been able to navigate these different workspaces from a law firm to in-house role. What inspired you to delve into the intersection of law, finance, and technology?
Thank you. So, I mean, naturally, I love technology. I use technology. If I see something that's different, it boggles my mind and I reach out to like product teams. I'm like, can I see a demo? Even being in A&O made me more technology aware, right? But then on a professional level, right, A&O gave me that platform to be exposed to what technology is. At A&O, so I joined A&O in 2012. For those of you who don't know on this call, A&O is like, if I would say, the largest commercial law firm in Nigeria, West Africa as well, known for groundbreaking deals, advising clients on cutting-edge technology. When you think about Alukan Body, from a technology and financial service perspective, you think about the likes of MTN, all the giant global tech companies, and like, think about them. Visa, for example. A&O was at the forefront of ensuring their investments in Nigeria, advising on them on product deployments. Think about it from telecoms, submarine cables, space satellites, online gaming platforms, social media platforms. A&O was at the forefront of it. I was involved in policies that shaped the Nigerian economy. Like, I was directly mentored by the likes of Mr. Oyebode, Mrs. Akintola, Mrs. Marks, Reginald. I mean, you cannot but appreciate that guidance and what it also does to an individual from a professional perspective and even personal perspective. And now the thing that put on the switch for me for fintech was Visa. So, I mean, if you're an A&O, you straddle different teams, and I had the privilege to be in business advisory department under Mrs. Makinde, and my day-to-day my day-to-day activity included like advising on product deployment. The blue guys engaged A&O, and you know, it would just be business as usual advising. But then their investment in Paystack switched on the lights for me because it gave me an insight to what the future of fintech is in Nigeria, even Africa as a whole. When we think about fintechs now, think about how banks used to be in the early 90s and how banks have revolutionized right now and how they are in Nigeria. So think about how fintechs can be in the next 10, 20 years. And for me, that was really interesting. So on a personal, so if you think about it, right, Visa invests in a Nigerian company, Paystack. And then what does that mean for Nigeria as a whole? It impacts the socio-economic development of a nation. You flip through the pages of newspapers, you go online and you see that the advice you've given has been reflected in national dailies, social media platforms. there's a personal fulfillment that comes with it, and also like a contribution that I've added to like my socioeconomic development quota for an economy. Now, let's take it to a larger scale. I joined MasterCard in 2022, and MasterCard provides me with the ability, right, to be involved in world economic development on a global scale. I'm advising on groundbreaking issues, things that technology that's evolving every day. Being a MasterCard, I'm able to learn new things about the world, my region I support, and collaborate on challenging issues that have a global impact.
Thank you very much, Ina. I mean, that is quite interesting. One thing that stood out to me from what you said is that things keep evolving over time. Banking 10 years ago is not the same system of banking that we have now. I mean, so things keep evolving. We have technologies that keep coming up every now and then. So I would like to ask, following from that, what exciting key disruptions and innovations in the fintech space have triggered your interest recently, and why?
So I think I'll first talk about asset tokenization and how it helps with new forms of assets. So if you think about it, okay, so a while ago, right, or even now, we use checks, we use debit, prepaid cards, credit cards, bank transfers to buy things. Many of us have even started using loyalty points or cryptocurrency to buy things. We're seeing that a new economy is emerging. The definition of money is expanding to include newer assets such as digital goods, data, and cryptocurrencies. And what I envisage is that in future, it will be routinely and seamlessly exchanged like money. So basically, money is expanding to include these newer assets. And what will enable the seamless exchange is what you call asset tokenization. So when you think about tokens, you think about tokens because it relates to, so when you think about tokens, think about masking or protecting sensitive data. With tokenization, customers and businesses are able to combine and exchange new forms of value. So when you think about tokenizations for how, in terms of the value, in terms of exchange, security tokens, NFTs, currency tokens would extend types of these digital assets I had earlier mentioned to be tokenized to include stocks, bonds, real estate, digital assets, and even currencies. Tokenization will also allow you to divide or open the door for partial ownership of certain goods or physical items. So for example, houses, art, ships, luxury items, basically, tokenization will enable it. So while tokenization is not so new, extending this technology to cover real world assets will transform how the world will see value being conceived and what payments can be used for. It's almost like how we had trade by barter back in the day, but this is for digital payments. It will also give consumers a broader set of payment options. And at the same time, you have your banks, your merchants, your ecosystem participants having the opportunity to discover or create new business models to help support value exchanges. And then, so that's for tokenization and newer assets. So another thing that I found interesting is AI, generative AI. Everybody knows what AI is, but the question is, how can you use AI and how am I seeing banks use AI? So AI is game-changing for banks. They are using it to enhance their internal processes and applications. They're using it for knowledge management, for cybersecurity, for credit decisioning, so to enhance their credit decision process. So for credit decision process, so banks can use AI and also open banking to have an idea of what the credit history of an applicant is, to help them make decisions, to help them score the applicants in terms of their credit worthiness and whether or not loans should be provided to these applicants. For cybersecurity, AI is helping banks to predict cyber threats, to do like simulations on security scenarios, to pinpoint anomalies. And what that does is it gives banks the ability to have a strong defense strategy in terms of cybersecurity. If you know now, because of how technology is ever evolving, threats and cyber threats and fraud are also evolving and becoming more sophisticated. And what AI does is to train the bank's technology to fight this, cyber threats. Do I still have time, or can I still keep going? Because I think I have a lot of
Please go on.
Okay, so and then one thing I find in terms of consumer use and for how it affects me as an individual is super apps. So super apps are apps that have a different variety of service deliveries. So think about your ride-hailing apps, your e-commerce apps, even banks. People traditionally use those apps for one specific use case. Super apps, what they do is they come in different shapes and sizes, and major players I have seen in the region have found their competitive edge with super apps. So if you look for it, so let's bring it home to Nigeria. If you think about how Jumia Pay works, Jumia Pay is a super app based in Nigeria. It provides hotel booking, food delivery, and even payments. And how do they provide payments? It's either Jumia app, Jumia Pay has a fintech, like a PSP license, or they're partnering with the PSP to provide their services. So what super apps do is they collaborate and partner with existing players in the economy. So it can be travel and tourism, e-commerce, payments, to enable to enhance consumer delivery and also just to grow their own competitive edge. With open banking, we've seen that super apps have also advanced, whereby you don't have to go to another app to make payments. All you have to do on that same super app is connect into the payment portals via APIs. Uber does that in some jurisdictions as well, but I don't think they do it in Nigeria. And then I think when I think about even from my day-to-day is buy now, pay later. So I call them BNPL. So in some GCC countries, regulators are moving to regulate buy now, pay later companies. So buy now, pay later companies provide installment payments. They offer people the flexibility to be responsible by their finances and make purchases in different installments with or without interest. So for example, I want to buy something online. It's a beautiful bag, but I don't have enough money for it. I've already managed my finance for that month. What BNPL does is it allows me to pay installmentally. I can pay this month, like a percentage this month, and then another percentage the following month. The only difference is I have that bag, but then I still pay in future. So it's gaining popularity, especially in Middle East, and regulators are regulating the fintechs that provide buy now, pay later, call it instrumental financing. And you are able to manage your budget on a purchase by purchase basis, and you can't just apply you can't just be onboarded by a BNPL player. The BNPL player would either the BNPL player or the bank would conduct credit checks on you to see whether or not you're credit worthy. We've seen that play out in maybe reviewing their transaction spend by based on their cards, and so it's like it's a soft credit check to get a sense of how you manage your money as an individual. So so that's it from me in terms of what I have seen in terms of innovation and how it's piqued my interest.
Thank you very much, Ina. I mean, you mentioned assets tokenization, you mentioned artificial intelligence, you touched briefly on cryptocurrency and buy now, pay later system that is being adopted by businesses now. One particular thing that interests me is your point on artificial intelligence. Artificial intelligence is definitely yet to stay. But as much as helpful as artificial intelligence is, it also raises a number of ethical dilemmas. From my own perspective, artificial intelligence is just as good as the parameters that the creators set for it. So it leaves a lot of room. It leaves a lot of things to be desired, right? But we understand that it's also helpful in rendering financial services and financial products. So it's going to be interesting to see how artificial intelligence and some of the other emerging technologies that I've mentioned change things for us in the financial technology space. If you're just joining us, this is the 9th edition of Alukwano Days Insider Series. We have Ina Arome with us today. Ina is the Senior Counsel on Regulatory Affairs for Eastern Europe, Middle East, and Africa at MasterCard. So Ina, things have changed over the years in the financial sector. How do you see the dynamic between traditional financial institutions and fintechs evolving? Do you think they are more likely to collaborate or compete in the future?
Definitely collaborates and also competes. The ecosystem thrives on collaboration. Traditional FIs and fintechs need each other to survive. And when I said competition, if you think about it, it depends on the type of fintech. There's the rise of digital banks, neobanks that would typically do the things that the traditional banks do or financial institutions. But that being said, collaboration is key to driving innovation, creating value for customers, and growing the financial service sector. Regulators are also at the forefront of drawing clear, right, how collaboration can be and how competition should be. Competition is important because it creates value and it's good for the economy, right? But fintech companies have been encouraged to work in collaboration with other stakeholders to deliver solutions, obtain licenses, and for them to take deposits from customers. So for example, even if you think about it from like your switching companies or your PSPs, some of your PSPs are able to issue cards to you, but the only reason why they're able to issue cards is because they have sponsored banks. They don't have the capacity to clear and settle transactions, and they can't take funds. So they need a sponsor bank to be able to issue cards. And that's collaboration in itself. We've seen the regulators issue circulars saying, you need to come to me to get approvals for future collaborations or collaborations between ecosystem participants. Regulators are aware of the dangers with collaboration and also want to put their eye on these collaborations in terms of how best to manage risk and what the benefits are for the ecosystem, and also enabling competition. So collaboration is key. It's definitely not going to go away, and everything will depend on how the regulatory landscape is in terms of whether to collaborate or compete. I mean, being a MasterCard provides an avenue for collaboration. That's our benchmark. We have a wealth of experience in enabling the ecosystem, providing fintechs required infrastructure for them to thrive, and also partnering with FIs as well.
That's an interesting perspective. I mean, so I understand that traditional financial institutions are here to stay, and fintechs are here to stay as well. So it's a question of sink or swim. So if you're not going to evolve, you are in the backward waters of the sector. So one thing I was able to pick from what you said is that there will always be need to collaborate, and regulators are also aware of the need to regulate collaboration between these traditional financial institutions and these new banks and fintech companies. So speaking of regulations, fintech is growing at a supersonic rate. New products are being churned out every day. What you have today is not what you're going to have next week. How do you see regulatory bodies adapting to these rapid developments in fintech?
So, I mean, if you think about it, regulators are issuing payment service and payment systems acts. So Nigeria is a special case because we don't have payment acts. But a lot of regulators in other jurisdictions are issuing specific regulations and laws to regulate fintechs that are licensable in their various jurisdictions. And they are doing this to manage risk to the payment ecosystem. Nigeria, for Nigeria, we have our BOFIA that covers PSPs and then various circulars and regulations. But other jurisdictions have a different approach to it because they have payment acts and specific regulations. And what we're seeing coming out of those regulations is localization. How do you localize your business in terms of who owns the company, what shareholders, the nationalities of shareholders, where your infrastructure is, how you bill your clients, also how your business continuity is in terms of what happens in case your business fails. Regulators are putting measures in place, cyber resilience, because of the prevalence of fraud and cybersecurity risk in the ecosystem. Because regulators know that technology is ever evolving, they know that they require stakeholder engagement and support. So regulators are speaking to the World Bank, other international organizations, forerunners of technology, big technology companies, to understand the impact of these technologies. Forums are being created, consultation papers are issued to get stakeholder feedback. Regulators realize that all they can do is policy, and they may or may not have the necessary capabilities to tackle technology. So they need ecosystem support. And we're seeing regulators do this and even call for requests for comments on new products. Regulatory sandboxes are being issued. And I mean, that's a welcome development. We're seeing it in different countries. Nigeria for Africa, I think, was the first to do that years ago. Remember, I spoke about cybersecurity. I'm seeing a trend in regulators wanting to regulate cybersecurity service providers because of the high risk of cybersecurity threats in the payment ecosystem. So I can't just drop a solution as a cybersecurity service provider and move on. I have an obligation. So I'm seeing that cybersecurity service providers are now required to be registered with the regulators, come on soil, and ensure that their products are in line with existing regulations and even international best practice. So that's how I'm seeing regulators move. And also there's something, I had earlier mentioned in what I do, systemic important payment systems. When the regulators notice that you have certain attributes in terms of your market share, if you are one of the only payment system or payment service provider in a particular jurisdiction, they deem you as systemically important, because if you fail, then it has a negative effect on the ecosystem. So regulators then designate those payment systems as systemically important, require them to maybe come on soil, and it's based on the Bank of International Settlements principles of financial market infrastructure, which require you to adhere to certain obligations. Systemic importance is payment systems designation is important, but sometimes we've seen that it can inhibit innovation and also have issues on your competitive edge if you're a payment system.
That is an interesting take. I mean, there is obviously the need to regulate companies and products within that ecosystem, but you also mentioned that there's also need not to overregulate in order not to strive for innovation. So I want to ask, right? You mentioned something about the need to regulate because there's cybersecurity challenges that companies face and what have you. So we have seen in recent times news reports about some fintech companies having problems. Take for instance, there's a Ghanaian fintech startup called Dash. Over the last 5 years, this company has raised more than 86 million US dollars in funding. And it was recently reported in the news that the company would be shutting down. And one of the reasons that was given was that there was mismanagement of funds. Obviously, there is also this point that was raised about the company having presence in about 4 or 5 African countries, and it was becoming difficult to oversee operations across board. In Nigeria, bringing it home, there's a cryptocurrency trading platform, Patricia, that's also experiencing a tumultuous run currently following a security breach. And this has led to the loss of customer funds. And it was recently reported in the news that the company would be issuing shares to the customers in order to defray the liabilities to customers. As regulatory oversight increases in the sector, what measures do you think fintech companies can put in place to mitigate these risks and navigate these challenges in this evolving landscape?
Okay. So you spoke about cybersecurity, right? And I mean, I think I've said it, like I've reiterated it in my previous responses. Cybersecurity, like, it is real. And like I said, as technology evolves, cyber threats are evolving, becoming more sophisticated, intelligent, and it's important for fintechs to implement robust security measures. You need to train your staff, provide awareness sessions for them, even do like tests. So you can do like a phishing email to see how it happens, whether or not they pass their test, do quarterly trainings because it's important. Invest in secure and robust cybersecurity management. MasterCard has one of the best in the world and is investing in AI and crypto-related cybersecurity solutions. Implement strict controls and also conduct due diligence on your vendors. We've seen that. So in Nigeria, for example, that we have a risk-based cybersecurity guideline for the ecosystem, for the different fintech, for the different banking and financial ecosystem players. You may not be regulated by the central bank, but it's important in central bank so let's take it wider now. You may not be regulated by a central bank in your jurisdiction, but it's important that you check to see what the central bank has put in place for its own participants and have like soft regulation for yourself to also manage how you deal with cybersecurity. Cyber resilience is important for every organization, be it fintech or not, and it's important. There's also, so that's for cybersecurity risk. And there's regulatory and compliance risk, right? If you don't have a license, you can't do anything. If your license is taken from you as a fintech, if you are licensed, that's a risk. And it's important that you follow your regulator. So some regulatory frameworks I have seen are not clear. Some countries don't even have established regulatory frameworks. But even when there's lack of clarity, even when there's no framework or there's lack of clarity, it's important that you touch base with your regulator. Regulators have policies in place. There are things we've seen as unwritten rules, and regulators have put strategies in place, right, in terms of how fintechs should be managed. From a practical perspective, I would advise that your business teams have a deep understanding of the regulations. Don't just leave it to your compliance and legal department to deal with. Be close to your regulator, I had said earlier, and also participate in industry body associations or forums and be close to the key stakeholders in your industry. Be updated on development and best practice. You need to prioritize this risk as fintech ecosystem evolves. Have your compliance training, make sure your compliance team trains your business team on a day-to-day basis. And I know I've spoken about regulation, but then think about it from a governance perspective. Central banks or regulators know what they are doing when they mandate a particular governance structure. A lot of people say that it's not fit for purpose, but indeed it's fit for purpose because of the risk some payment systems and payment services portend to the economy. So we've seen regulators say you have to have 2 independent directors, you have to have a risk committee, you have to have an audit committee, you have to have an external auditor. Even if you're not regulated by a regulator, ensure that you have those measures in place because the regulator knows why they put it in there. And you, like I said, for cybersecurity, you can apply it from a soft regulation perspective. Best practice, have on your board someone who has a wealth of experience, number of years of experience. I know that fintechs are evolving, but there are decisions that fintechs may make right now that short to medium term will be beneficial. But when you think about it from a longer term perspective, it may be detrimental to them. If you have someone who used to be an executive director of a bank, chairman of a bank, CEO of a bank, CFO, CTO of a bank, have that person on your board to give you, to be able to provide lessons learned experiences, give you a different perspective, because I've seen that happen in boardrooms when you may think the older guy doesn't know what you're talking about, but he has seen it. I had earlier said that where banks were in the early 90s, right now is where fintechs are. So I feel like, I believe that your board should comprise of stellar individuals, wealth of experience, and if possible, 2 independent directors.
Thank you, Ina. I agree with you on what you just said. I mean, there is the need to have a dedicated compliance team and undertake regular trainings of the business team by the compliance team. I also understand that it is also important for fintechs to have a dedicated legal team in place in order to handle some of these compliance matters. It is not until you want to start raising funds that you now begin to put some paperwork in place.
Exactly.
Yeah, exactly. So it is important for companies to have a legal team in place to oversee these compliance matters, whether in-house or whether it's an external legal team. We have a question from one of the members of the audience. For this question is from Yoma. For entrepreneurs looking to enter the fintech space, what legal advice would you offer to increase their chances of scalability?
Excellent legal advice. Excellent legal advice, regulatory and compliance resources is required, both internal and external. So invest in a good law firm. People are afraid of fees, but it's important that you invest in a good law firm, law firms that have a track record of excellence, and also ensure that you employ good candidates, right, to fill in legal positions and compliance positions in your firm. Data protection is important. It's not going away. Ensure that you invest in good data protection resources, have a data protection officer in place, and ensure that you comply with data protection requirements. I had said earlier, be close to your regulator. It's important. Know what your regulator is thinking. Hire a public policy team to keep you abreast of policy development, what the regulator is thinking, how to manage strategy sessions with your regulator, how to be at the forefront of decisions that would affect your business. Collaboration is key. Listen to your partners, listen to your customers. The ecosystem needs one another. You can't say, no man is an island, even in life generally, but But fintech's ecosystem, it thrives on partnership and collaboration. Listen to them, because you can get escalated to your regulator, or even be seen as someone that's not collaborative, and it will affect your business. Be consumer and regulatory sensitive. The forefront of fintech is enhancement of consumer service delivery. Be consumer sensitive. Know what your client wants. As technology evolves, so are your consumers' needs evolving. And be regulatory sensitive. It still goes back to my earlier point of having a good compliance and regulatory team on board.
Thank you very much, Ina. My next question to you is going to be on financial inclusion. Now, for the members of the audience, financial inclusion is a system where financial services are delivered by a range of service providers to reach everyone, especially the underserved population, whether in the rural areas or some unreachable areas. Now, financial inclusion is a major goal of the Central Bank of Nigeria. Over the last decade, we've seen the CBN issue policies and guidelines that are directed at increasing financial inclusion, because that goes a long way in driving economic growth as well. What do you think are the major challenges that fintechs encounter in driving financial inclusion?
I'm happy you mentioned CBN. CBN is serious about financial inclusion. The last administration, even this current administration, is serious about financial inclusion. Policies are put in place. It's encouraged, right? And I know that the CBN its doors are open, right, to encourage financial inclusion. So from a regulatory perspective, not just for Nigeria, but generally, we've seen a trend or a requirement that if you are a regulated fintech, you need the regulator's approval before you can issue products and services to the ecosystem. And regulators, being who they are, may take their time, right, in reviewing your product description. You would have multiple meetings, and they can take sometimes up to a year, right, for you to get approvals because of how your product has been described or what it comprises. This delay can stifle innovation and creates a situation where your fintech loses its competitive edge. So I would say regulatory delays by the regulator. Lack of clarity of regulations as well are one of the major challenges fintechs encounter in driving financial inclusion. From an infrastructure perspective, data is expensive. Everybody says it, but they say that Nigeria's data is actually the cheapest in the world, but data is expensive. Internet connectivity is required sometimes to utilize these products. So it's not there. There's power issues to charge up some of these terminals or products. So that's an infrastructure issue. And then there's acceptance by the unbanked and underserved. Traditionally, if we go to rural areas, the consumers would do ajo. So for those of you who don't know, ajo is when everyone pulls their savings together into like a collective, and every month a particular person gets like the whole bulk. So they are monthly contributions. So that's what the unbanked do. It's difficult for fintech companies to actually then provide services to these guys because of the fact that they don't trust or they will not accept these financial solutions. And then there's lack of trust. Now, this underserved and unbanked will typically go to your big banks that have been here for like the past 100 years, i.e. your first bank, or rather go to a fintech because they're like, fintech to take their money away and run, right? Take their money and run away. So for them, they'll rather lean towards traditional banks as opposed to go to fintechs. So fintechs have hard work to demonstrate social corporate responsibility and governance to just prove that they can be trusted to people in the rural areas. I mean, Nigeria as a country has the potential to embrace this digitization, and it will be done in rural areas. So what I do in MasterCard, I advise a product team called Humanitarian and Development that provides financial inclusion products and services to rural areas and rural communities in MEA, Middle East and Africa. And what this solution does is to address some of the issues I had earlier mentioned. So I spoke about internet connectivity. Some of these products can work offline. They address infrastructural challenges by these rural communities. And even when there are issues with smartphones, so most people have smartphones, but not all smartphones are near-field communication enabled. So they may not be able to be accepted by these solutions. So that's an issue, low smartphone ownership and lack of consistent identification. We all have different means of government identification in Nigeria, and sometimes that can be a problem because not everything is housed into one repository. So, I mean, that's what I've seen in terms of challenges in financial inclusion, but I know government is working hard, right, to ensure that there's financial inclusion, there's internet penetration in these rural areas.
Thank you, Ina. I noticed that we've been getting questions in the comment box. In the interest of time, we may not be able to take all of them. You can reach out to Ina. You can catch her on LinkedIn. Her handle is Ina Arome. I'm sure she'll be able to answer any question that you may have. As we are coming to a close, you identified at the beginning of the webinar, you identified exciting disruptions that you think that you believe are very interesting. What should individuals and businesses prepare for as we navigate this fintech revolution?
Be adaptable to change. And I think in every response I've said technology is ever evolving. Be adaptable to change. Be willing to adopt new technologies to enhance your customer experience, your service delivery, and competitive advantage. Have strong cyber resiliency programs in-house. Invest in cybersecurity programs and measures. Be more collaborative. Ensure there's more partnership between you and ecosystem players, and ensure that you navigate regulatory developments. Have your regulatory team in place, your legal team in place. Invest in a good law firm. Akanni is here, forefront of technology and fintech. It's important, it's crucial. Don't take it for granted. Don't say that you don't want to invest in legal fees. It's important. Regulatory non-compliance with regulatory issues has reputational and financial impact on your business. So it's important that you invest heavily in legal, regulatory, and compliance.
That is an interesting take. What you say in practice is that a lot of these fintech startups usually pay more attention to the business side of things, while ignoring the need to have a legal team that is going to advise on the necessary compliance matters. And I believe that if you cannot afford an expensive legal team, there are law firms like Akanni that are ready to grow with the firm and advise from the point of conception to the point of fundraising to exit for investors and all of that. Thank you very much, Ina. So we are going to be putting you on the hot seat, and we're going to be asking some questions that you are required to answer under 1 minute. Can I proceed?
I know these questions. That's fine. Yeah, I can imagine what you're going to ask me. Yeah.
Okay. If I give you $1 million, how will you invest it?
$1 million. Thank God you didn't say 1 million naira, but yeah, $1 million. Definitely invest in a fund that supports technology companies.
You're not going to spend anything on yourself. I mean, I believe that spending money on yourself is a form of investment.
Things spoil, luxury items spoil. So, but yes, if you give $1 million, definitely invest in technology. Maybe I'll take like maybe $5,000 and enjoy myself, but the remainder is going into a fund. Yeah.
That is interesting. Yeah. And my second state question and the final one is, what is your life's philosophy?
Trust God, definitely. Work smart and live well.
Thank you very much, Ina. It's been an exciting session. I have learned so much from you, and I believe that our audience have had an insightful session as well. Thank you very much for accepting our invitation. Thank you very much for taking the time to speak with us today. We also want to thank the members of the audience. We are here because of you, and I believe that we've had a nice time as well. Thank you everyone for coming. It's been an absolute pleasure to be your host for today. And till we meet again at the next edition of Insider Series, I want to say have a nice day and enjoy the rest of your day.
Thank you. Zacheus, if you want, you can share the questions. There's some unanswered questions in the chat box. You can send it to me. I would respond, and you can send your responses directly to the participants.
We will do that.
Yeah. Yeah.
Thank you very much.
Thank you, everyone. Thank you.